This is Jason Donovan with the Wealth Titans, and today we are going to be taking a look at one of the key investment success factors. But I wanted to start off with a quick statistic to illustrate where the average investor is versus where they ought to be. Now, according to a study by Vanguard, over 20 years, ending in 2003, the S&P 500 returned 13% a year. In the same period, mutual funds underperformed as usual to the tune of 10.3%, leaving the average investor with a measly return of 7.9%. Now, with statistics like these, we are left asking ourselves why. Why can't the average investor at least keep pace with the market? And why don't professionals keep pace with the market for that matter? And personally, I don't find lagging behind the general market successful, and I don't believe you should either. While many variables are perceived to have a great impact upon investors' success, such as fund fees, brokerage fees, lack of knowledge, there really is only one factor that matters. And it's the one variable that is the difference between the investor's 7.9% and the average investor's potential of 13% plus. The factor I'm referring to is the brain, specifically how our brains are wired. And it's a topic that we don't talk about nearly enough when it comes to investing. And I think the main reason is because it's so much more fun to play with numbers to see how much money we can make. However, at the end of the day, the greatest success factor in your investing is you. Even a black box investment system requires you to push the button at some point. The human brain has been wired in a very specific manner as a result of evolution and natural selection. And unfortunately, this wiring is designed to do the exact opposite of what is needed when it comes to investing. And taking a quick peek inside the wiring will condense years of medical and psychiatric research into one statement. Our brains have been engineered to help us survive in an environment of small numbers and small odds. So how do we invest properly if we aren't wired to do so? The short answer is we don't. And in the face of such an insurmountable task, investors tend to rely on emotion rather than logic. And we know this from histories of market madness. History clearly again and again through irrational bubbles demonstrates how markets can get the best of investors. And history continues to repeat itself because of how we are wired. Now, utilizing these truths, we can take advantage of our own wiring and the wiring of our fellow investors to dramatically improve our investment performance. This does come with a word of caution. Simply knowing these facts will not save you from them. You have to act upon them, which means going against the grain of what many other investors are doing. In each period listed above, experts predicted the rosy times had no end in sight. Now, the key is to realize that even though we are unaware of these truths, that we are just as susceptible to the crippling behavior of our brain's wiring as everyone else. We have to remain cognizant of our weakness as we invest. Remaining cognizant allows us to remain rational and focused during these inevitable market bubbles. And this requires a great deal of strength, as we will have to wait patiently during these inevitable times of market mania, keeping our own emotions in check. These periods of bubbles are particularly important because these bubbles will utterly destroy your investments. You can recover from a 3 or 7% loss, but not a 50 or 89% loss. And I cannot stress this point enough because the majority of investors lose their shirts during these times of market mania. And it's during these times that years, if not decades, of consistent positive returns can be wiped out within the span of a day or a few months. Despite this harsh reality, these crazy times can and do have a positive side. The bubbles themselves aren't what makes money in the long run, nor does attempting to time the top to get out at the right time. It's after the mayhem of the bubble that we can profit big. Post-bubble periods are by far the greatest opportunity to purchase stocks dirt cheap by the truckload. And it is in this way that we can exploit our human weakness into a strength. The way our brains are wired is counterproductive to successful investing, and we must use this information to first protect ourselves from ourselves, then harnessing our emotions and remaining calm during bubbles, we can dramatically improve our investment results over the long run. Thank you for watching. I hope you found this informative and actionable. If you have any questions, please let us know in the comments section below, and don't forget to hit the subscribe button and check out some of our other videos. To your investment success.